Okay, well, Lyn Alden is founder at Lyn Alden Investment Strategy, and she's with us now to take some questions. Lyn, good to have you back on the program. Thank you very much for joining us. Since the last time we spoke, there's, I think, been a few things dominating, right? When the weekly news cycle has changed, and how there was DeepSeek thrown in there somewhere as well. What's the dominating driver over the next few weeks, Lyn, according to you, for global equity markets, in your opinion?
So thanks for having me. I think probably the biggest one still to watch is tariffs. A lot of that has been delayed, not all of it, but some of it. And I still think that's probably the biggest wild card to watch in the weeks ahead, the months ahead, perhaps the rest of the year. We'll see how that timeline goes. I think that's very big. I also think one of the ones that went under the radar is the recent announcement by the Treasury Department. The new Treasury Secretary used to be critical of the prior Treasury Secretary's policy of issuing a lot of treasuries on the short end of the curve, so excess T-bill issuance during this time of heightened deficits. And yet he's signaled so far that they plan on continuing that policy in the first half of this year, which all else being equal is fairly good for liquidity. And that's probably under the radar, another thing to watch for markets, because as long as that kind of pro-liquidity policy continues, it offsets some of the ongoing tightness from the Fed and is, all else being equal, pretty good for financial markets.
Lyn, how are you expecting now U.S. equities to shape up? They've been trying to withstand all these confusing headlines on trade wars, tariffs, etc. But largely, the up move has been intact, at least so far. Do you see more of the same?
I do. I think that I'm less likely to expect as strong of a year for 2025 as we saw in 2023 and 2024. But there's valuations are mixed across the board. So there's a lot of valuation bubbles in some of the more defensive assets. There are stocks like Costco and Walmart trading at 50 or 40 times earnings. There are other tech companies trading at pretty reasonable earnings, in the 20s earnings multiples and elsewhere. And liquidity conditions look pretty good. In addition, the debt ceiling ongoing issue in the United States is ironically pretty good for liquidity while they sort that out, because it potentially means the Treasury has to drain some of its cash into the system, in addition to them not wanting to issue extra coupons at the current time. So with liquidity conditions looking decent, the biggest wild card still is tariffs. We could have any number of disruptions among large cap equities. But we look at financials, they came in pretty strong. And so I think this is probably going to be a choppier year, given more headline risks and things like that. But I wouldn't say there's major calls for concern yet.
All right, Lyn, that's $1 million question, right? What Mr. Trump is going to do next with regard to tariff as well as policies. So we'll have to wait by for that. But what about coming back home to the Indian markets? We had discussed this in the past that India was in favor a few months ago, while China, Latin American markets were ignored. From the emerging market basket, given that the Indian markets have pulled back as well, how are you viewing it? What's the preference out there? And in India, I think you were looking at financials because valuations, well, they were more palatable. Your view now?
Yeah, I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the U.S. in terms of the size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends in place.
I think that's a good point that you make. By the way, Lyn, there's been this constant chatter. We don't have any timelines on this, right? We've seen some. I don't know what to make of it. The news flow out of the Middle East, right? But at least there is a ceasefire, and we'll see what happens next. But Russia, Ukraine, there is a summit which has been planned for some time, and apparently there's a plan which is going to be unveiled next week. How significant and is it going to be for asset markets, for oil prices, and generally, the environment for equities if that conflict also gets resolved, or if there is some sort of a ceasefire?
So I view it as obviously very consequential for human lives. I think the impact on financial markets might be smaller than assumed because it's already had a lot of time to absorb in markets. I mean, oil's trading well off its highs it experienced back when the war began. Generally speaking, a lot of Russian oil is still finding its way to the market. And while this can reduce some of the tail risks in the oil market, I generally view it as probably one of those ignore the news events, which is to say that can take away some degree of uncertainty once it happens. But I don't view it as a major market driver at the current time, even though it is, of course, a very significant geopolitical ongoing issue.
Okay. All right, Lyn, we will wrap it up on that note then for today. Thank you very much for joining in and giving us some perspective on how you're reading the situation right now. All right, let's move on. Lots of corporates and lots of commentary coming up on the show today. So here's the lineup. At 8:30 a.m., we'll have Deepan Mehta joining in. We'll talk about a lot of these results that have been pouring through and the big ones that are expected today. At 9, we will be speaking with the management of Sula Vineyards, talk about their third quarter performance and demand trends going forward. At 9:20, our market master of the day is Ravi Dharamshi. We'll find out what he makes of the market now. Is this stability going to last? What do you do in this kind of an environment? At 9:30, we are in conversation with the management of Birla Corporation. We also will be speaking with Mangesh Badang of Centrum Broking, talk about Birla's numbers and, of course, the outlook for the cement sector overall as we are going ahead. After that, we have the management of IKES Health joining in to talk about their outlook post the third quarter. At 9:50 a.m., Rahul Bothra of Swiggy joins in. Swiggy, like I said, could be the big debating point today, big talking point. And we'll see what their outlook is after the third quarter. And then in our special segment, it's the economy. Lata today is going to be in conversation with Chetanai of Morgan Stanley about the US-China tariff war and the upcoming RBI monetary policy.